You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky music, gotta love it. It gets you in a good mood to hear that music. Means it's time for a new program here on the Options Insider Radio Network. If you're saying to yourself, well, I haven't heard that music before, you're right, you haven't. We did a sneak preview, but it was just to some select listeners the last week. That isn't even live on the network yet. So this is the first time we are actually going out live here for the world premiere of This Week in Futures Options. And the name says it all, listeners. This program will break down all the data. You really have a hard time probably finding on your own. We're going to break it down for you and some pretty cool stuff. All the fun stuff we like to do on some of our other programs and indeed on the website there in terms of breaking down unusual activity in names like Apple and Google's and biotechs. We're going to do that now in the world of futures options. That's right. So crude and gold and ags and the 10 years and the rates and who knows, lean hogs, and throw in whatever else is hot that week. It's going to be on This Week in Futures Options. We're going to break it all down for you. I'm really excited to do just that. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, now up to 14 programs here on the old Options Insider Radio Network. And, of course, no shortage of ways for you guys to get access to this fine program as well as to every other program on our network. The easiest place to go, the mothership, the flagship, theoptionsinsider.com. While you're there, click around. Read some articles, click on some headlines and breaking news from the options market. We won't hold it against you. And when it's time for some futures options or whatever other audio tickles your fancy, click on that Insider Radio Network tab and your audio voyage has begun. And, of course, you can always find us along with the major podcast providers, iTunes, TuneIn, Stitcher, including now this week on the Google Play Store. Google finally getting into the podcast game, turning on their podcast store, so we're live there as well. And of course, also via our mobile app, iOS, Android, even the Fire OS. You can find it on all those platforms. And while you're listening, while you're streaming, while you're downloading, we'd love to hear from you guys. If you guys have questions, if you have comments, you want to know something about what's going on in the world of futures options, this is the show to hit us up on. We have a whole segment for you called Futures Options Feedback, where we will get into all that fun stuff in a lot of detail. And to help me break all of this fascinating activity down, I am joined by a frequent offender on our network, but now he's jumping up here. He's going into the big chair, a big co-host seat, and he's excited to do it. I'm excited to have him on here. He is Nick Howard, the founder and CEO of Bantix Technologies, the creators of a fun little platform you guys may have heard of called QuickStrike. Nick, welcome to This Week in Futures Options. Sure, we're finally live. It's exciting, isn't it?
Yeah, it's glad to get started. I'm hoping that we can get some people excited about this report that's going to be available from the CME Group website in the next week or so. But like you have already done, you put out some links so people can follow along for today, and we'll get you acclimated and ready to start using it as soon as it's publicly available.
All right, I'm looking forward to it, Nick. So without further ado, let's get right into it. We're going to break it down. If you didn't see our links, listeners, and of course, if you're listening to this after the fact on demand, I know a lot of you going to be, we will have those links available for you in the show notes. But this whole show is really going to break down around a report, a really cool report that our buddies over there, Nick and the team over there at QuickStrike, are going to put together for you guys, kind of breaking down a lot of this information we're going to talk about on the show in a nice, easily digestible format. You can get it a bunch of different ways, including PDF. Nick, before we even get into it, then why don't you tell our listeners where they can go if they want to get their hands on this very fine report, sir?
All right, so this report, at least in the way we're going to discuss it for the show, is going to be available from the CME Group website as part of the QuickStrike toolbox. As I mentioned, it's not quite out there. It's in beta for them. We should be rolling it out very shortly, but you'll be able to go, if you search for QuickStrike, QuickStrike off the CME Group website, you'll be taken to the QuickStrike Essentials page, and from there you'll be able to find the other tools that are available. So once it's out there, the idea behind it is to let you follow along for the week and see what each of the products are doing. So every day we'll build, so you'll be able to see what the activity is, and we'll discuss it in more detail on Monday, Tuesday, Wednesday, Thursday, all the way through Friday, and it'll always be in comparison to the previous Friday. So thus the name This Week in Futures Options. So you'll be able to really, start tracking where there's some activity, where some of the big movers are from a strike standpoint, how the open interest has changed. And these are all important things once you start looking and wanting to trade the options on futures.
Yeah, so listeners, stay tuned because we're going to break down that report for you. You guys can always access it via the portals Nick just mentioned, or of course, we're even going to put it out for you. We're going to try to anyway. We're still working out all the details and how the best way to get it to you, but probably a nice little easily digestible PDF. So you guys can even grab that as well if for whatever reason you don't have time or you can't access the portal over there to get the live updating report. You want to just get a PDF version, maybe read it on your commute home or listen to it and read along as you're listening to the show. You can go for that as well. It's pretty interesting stuff. And so, Nick, let's get right to it. Let's break down some of the hot activity that's been lighting it up this week. I thought we'd start, as we are wont to do a lot these days, our gaze is inexorably drawn over there to the realm of WTI and indeed to all things crude oil. It has been an interesting week, shall we say, for all things crude oil out there. And I thought, as I'm looking at this report, Nick, I'm listening and I'm thinking, I know a lot of our listeners are coming to this from the realm of equity and index options, so they're used to their Apples, their Spies, their Facebooks, their Teslas, et cetera. And so as we're breaking down this report, I think it may be helpful for them and for a lot of future listeners to this program who can come back and listen to this episode to do kind of a rundown right now, a breakdown of what exactly this report actually entails. Because I know looking at this for a lot of our listeners who aren't familiar with, let's say, futures options symbology or all these other things we're breaking down here and some of the cool nuggets we're breaking out in this report, it may be a little bit intimidating for them. So let's ease them into it, shall we, Nick? And this is your report. I'll let you have at it here. Let's start. We're looking at the This Week in Futures Options WTI report, listeners, for all of you kind of playing along on the home version or after the fact, listeners. And Nick, why don't you go ahead and break this down, maybe column by column for our listeners so they know exactly when they come to this, they know exactly what they're looking at, and also when we're breaking it down for them here on this program, what it is we're actually talking about.
Okay, great. That sounds like a perfect place to start. So the report that you have out there, you're going to see the symbol in the first column, and the and it's probably not as familiar as you've seen in the past, but it's really pretty straightforward. And once you sort of get the gist of it, it'll make complete sense. Okay, so if we look, our first row, first column, we have the symbol. It's LOM6. Now the 6 is going to represent the year of the expiration. Okay, the LO is going to tell you what product we're in. In this case, LO is one of the ways that the symbols can be used for the crude oil. Okay, so that happens to be the one convention that we're using. And then the third letter, or the second letter from the right, is going to tell you the month that represents. Now, in this case, it's an M. M in the futures world is relates to June, so it's the June contract. But you'll notice next to it, and we'll jump over to that second column, you'll notice that there's a DTE, or days to expiration, column. It just so happens that in the crude oil world, and this doesn't exist in every product, futures-based product, in crude, the option contract happens to expire a day or a month prior to the actual symbol that exists in the expiration symbol. So we have a June contract. It expires on May 17th, and underneath that there's the days to expiration. So if we go down, it's pretty easy to see that there's an increasing days to expiration. So what we've done is we've got them ordered accordingly. So you're going to see the most recent expiration and then all the way down to later expirations. Now, in this case, which I cut off the report at 1 year. As part of the interactive tool, you'll be able to go out further. And crude has 10 years worth of options, but generally speaking, people are going to be confined within that first calendar year, even first half of the calendar year, and most times the first 2 or 3 options. So generally speaking, you're going to be looking at where most of the activity is in these individual products on this report page. Okay, so what we'll do, and we'll learn as we do this show, we'll try to provide little helper links on the reports so you can go and see what that calendar month symbology is. So you'll notice right away when you start looking at it, M, N, Q, U, those are in order. And for crude and for most of the products, not all of them, you will see sequential expirations that are available to trade. Okay, so we have our symbol, which comprised of the product, the month, and the year code. All right, we have our days to expiration. And what you'll notice when you visit the report throughout the day, if you happen to be doing that, or if you look at it on what we try to do is at the end of the week, we roll this report all the way through like Sunday at 5 o'clock. So you'll be able to see what happened in the prior week all the way to the new start of the next week's trading. Okay, and then one of the features that I think we'll be providing in the near term is the ability to go back and look at prior weeks. So, but as you get more familiar, you'll be more comfortable in navigating what that report's actually doing. Okay, so first 2 columns we've taken care of. Third column, and you'll notice there are super column headers. So in this case, we're looking at expiration information. Okay, so everything so far has been about the expiration. Third column is the at the money strike. So what we're giving you here is where the at the money was. So that's the strike that's closest to the underlying futures contract, right? So and you'll see shortly that the futures price is right next to the at the money, just to give you an idea of what the underlying is that's tied to that expiration. But you'll have last week where the contract started from an at the money strike standpoint, and then where it is currently. So in this case, you see that we had a bump of 2 points. So overall for the week, the market was up. If you see green, market's up from if the strike moves up, that means the futures are up, right? And if it's red, that means the strike has moved down because the futures are down. All right, and then the fourth column where it says future, again, this is the future tied to this expiration. Now, it's a little different than the equity world, right? Because equities, you have a bunch of different expirations and they're all tied to the underlying stock. But when you're trading futures options, a lot of times you'll have each expiration will be tied to its own underlying futures contract. And generally speaking, there's a term structure futures contract, meaning there's something that expires in N days and then N plus 30, N plus 60, N plus 90. Not always, but generally that's the case. So you'll have, in most cases, you're going to have expirations that are tied to an individual future. And then in some of the ag products, you'll have expirations you'll have 3 or 4 expirations that are tied to the same future. But in crude, you're always going to have each expiration is going to be tied to its own underlying futures contract, and you'll get acclimated with that. And that's one of the things that's probably most difficult to understand when you start looking at futures options. And what we try to do if you ever go and look at some of the other free tools that are available on the CME website, when you go to like the pricing sheets for these different products, we try to show you the expiration date for the expiration and then the future associated with that expiration. So we'll try to do some of that in this report. So for people that are new to this market, we'll give them a little bit better understanding of how to start to read that stuff. So we see that futures up a couple bucks. And we're giving you starting point where it is currently. And again, these are going to be updating throughout the day. So if you come to this report, you'll be able to see what's happening at any given time. Okay. The next group of columns is the volatility column. So as expected, it's going to show you what the market volatility is. So in the first column, it's the at the money again. And I'm sure most people recognize the fact but the at the money is generally the volatility that people use to state whether an option is either up or down in price, right? Or whether it's rich or cheap, or whether the market wants it or doesn't want it. So we're always going to be using that as our gauge for whether it's been positive activity for the price or negative activity for the price. So in this case, you see we had a small rally in the crude, and the volatility's down. And probably what's happening here is the crude was up last week, and people were expecting crude to sort of follow through for this week. It didn't have a great follow through. I think we're a little higher earlier on, but it came back off. And typically when that kind of stuff happens, you start to see a little bit of a drag on the volatility or hit in volatility. So it makes a lot of sense that things would be down. And then right next to that, we're showing you the 25 delta risk reversal, and it says C minus P. That's call minus put. So what that is, that's the 25 delta call and the 25 delta put. And we look at those volatilities as well. And then we take the difference between the call and the put. And what this lets us do is represent whether the upside or the downside is which one is more expensive, right? So some people call it the 50 delta risk reversal. Where my background when we were trading, we called it the 25 delta risk reversal because it was a match between the 25 delta call and the 25 delta put. So what we see here is that at least in the first 4 or 5 contracts, we have where it is up, which means that it looks like the calls got bid a little bit more than the puts did. Now, it's still biased to the put side, meaning the put has a higher volatility. That's why we have a negative number, but a little less biased than it was at the end of last week. Okay, so we have our expiration column set. We have our volatility column set. And the next one, open interest. Now, I know most markets watch open interest, but this again is going to give you an idea just of the general overall activity in that contract, okay? And with the CME futures and options contract, you're going to see typically a lot of green because it's more and more popular, always more and more open interest especially as there becomes activity in the underlying. You're going to see that this is increasing on a regular basis. So if we look all the way down to that in the light blue section, we see our first total, okay? So on the columns that we can total, we're going to show those totals, or so you can see overall for this group of expirations what exactly has happened. So if we jump down to that bottom, we see that open interest, meaning that new positions in the market for these expirations is up about 150,000 contracts, or 6.5%. Okay, so again, we're going to show you where it started last week, where it is today, how much it's up from a generic numeric standpoint, and then how much it is up from a percentage standpoint, okay? And down below, you're going to see that percent represents how much it's up. So if you do the math and you do the division, you'll see that those match, okay? Next to the open interest, the total open interest, you're going to see the put-call ratio. Now, this again is telling you, it gives you another idea of where the bias might be for the downside or on the upside. So interestingly enough, even though we have if we go back to our volatility column, even though we have puts being a little bit more expensive volatility-wise from the call, when we're looking at an equidistant amount away from the at the money, we see that our put-call ratio it still looks like there's more call open interest than there is put open interest. So there's a number of things that can tell us that as the market rallied, there was a lot of trade in there, or a lot of covering of something, or there's still a bias where people think that there's an upside to crude. But again, these numbers are here to sort of work together. So is the risk reversal sort of in line with what the put-call ratio is telling us? So again, this is the number of outstanding puts over the number of outstanding open interest calls. So you can give you an idea of how balanced the market is or imbalanced it is. And you'll see other commodities or futures like the S&P always has a number much greater than 1, because there's generally a bias to the put side. And same thing with the risk reversal; it'll be negative because there's the skew down for the downside is much higher. Okay, so Jumping to the third column, you're going to see it's a different color, and what we're showing here is the most active strike for that particular expiration. So in this case, it's going to show us how much the open interest in what's the highest numeric change in open interest for each of those expirations. So this is another good way to tell you whether there's a big opening in a strike, so that'll tell you whether a lot of interest has been generated, or if there's been a closing a strike. So a negative number is going to say that the open positions are going down. A positive number is going to say, hey, there's renewed interest in this strike. So again, it's all meant to give you, it's not meant to give you the full picture of things, but it's meant to give you a picture of where a lot of the activity is. And not from the report itself, but from within Quick Strike, the application, you'll be able to click on these different boxes and get more detailed information about the given expiration or about that strike, et cetera. So as you get more comfortable with this, if you want to experiment and learn a little bit more, it's always time to come over and take a look at that stuff as well. And then finally, wanting to get you so we can, if we have any questions or if Mark wants to jump in here at any time, we'll talk about the volume section. Again, this one is going to be, I think, this one is going to be a column set that people are going to look at quite a bit because it is it's going to represent for intraday, the electronic volume that's occurring, and then overall for this week, just the total overall volume. So you come in here during the day, you're going to be able to see that little number. For instance, we're looking at if we look at LOM6, which is the June 2016 contract, we see it's like 56 or 57,000 traded today in that expiration for a total this week of 446,000 and change. So that's 60% of the volume that occurred in this group of expirations in that front contract. Okay, so you'll be able to come in here and see where the real activity is. And this is a testament to what I mentioned before. When you're trading futures options, a lot of the activity is going to take place in 1, 2, or 3 expirations. Okay, so that's something to keep an eye on. And these other ones are here to give you again, there's going to be some longer term things that you can look at here. But generally speaking, when you start looking at the volume and the open interest, that's going to concentrate on the early part of the term structure. And then finally, there's a put call ratio for the volume as well, which is basically telling us where the activity was for the week. So in this case, there was many more put buyers in the crude than there were call buyers in most of the first 4 contracts. And then finally, we're seeing that if we look at column row 1 and row 2, there was a big interest in the 35 puts and the 31 puts in the July contract, which is N6. And then as you go further out, there was more activity in the upside. But again, that volume was small in comparison to the overall volume of the product itself. So that is sort of a semi-long-winded initial look at this, but there's a lot of information. And what I'm finding is that it's very easy for me to keep up with the market just by looking at this a couple times a day. So you can see the market up overall. Is the volatility up overall? Where's the trade? What kind of are people closing just by the red and the open interest? Is there lots of volume? Those kind of things. And we'll start to add things like average daily volume and those kind of things, so you can see in comparison of how this day or this week is in comparison to the past. So those are some of the initial things. I hope that wasn't too much at once, but Mark, take it away from there, man.
It's a lot of information, but you're right. It is kind of something we have to cover here because we're going to be using these reports and referring to them so actively throughout this show. And it's also a challenge for you guys out there because we really want to be able to condense a lot of information for you guys and be able to hit it in a pretty timely fashion, and also give you guys the tools to go search for this kind of stuff yourself. And Nick, I'm looking at this. And by the way, if you're listening after the fact and you're saying, wait a minute, I can't access that now because it's already the up numbers have changed, don't worry, we'll have the PDF available for you in the show notes, so you can pull that up while you're listening and say, okay, I see exactly what he's talking about in this column, because it will help you in future episodes as we're talking about different things. But Nick, the thing that leaps off the page to me, quite literally in this case, looking at this live version right now over there, linked through the CME web portal there, is that it does a lot of the heavy lifting for you. So if you're confused, you're concerned listening to all those columns and saying, oh my goodness, that's a lot of data for me to get through, you can just look at a glance, and the TWIFO, as I like to refer to it, report there, Nick, does a lot of the highlighting for you. It's going to highlight, for example, what Nick was talking about, those June 34 puts, which are just lighting it up this week, Nick. About 60% of all overall volume for this expiration, at least, coming in that one chunk. A total of nearly 450,000 contracts going up there this week. So that'll tell you where the lion's share of the activity and the interest was this week, just in that one strike, the June, and that one option, the June 34 puts. So that's, if you just want your kind of WTI, your crude oil at a glance, this is a good way to go too. It also highlights some of the other changes like Nick was mentioning, but also highlighted in color so you can see them very easily and they stand out for you on the page, like the changes that are going on out there in the skew, or some big numbers going on in some of the other contracts out there, like the 31 puts in July and things like that. So a lot of interesting things that kind of just leap off the page. And I think Nick, once a lot of our listeners have a chance to look at this for themselves and see it for themselves, it's going to make a lot more sense. And it's a good tool for you guys if you're dabbling in futures options now, or maybe you're kind of playing around in GLDs and your USOs and your Bales and some of the other ETFs, but you want to really get into the real futures options, the real nitty gritty, and stop messing around with those ETF things. Well, then this kind of report will arm you with some good information so that you can go forth and find some opportunities for yourself out there. Maybe you think, hey, those that 34 strike out there in the puts, those are a little bit too rich out there. I think maybe I'll be doing some put spreads that sell that strike or something like that. This kind of report will help you identify those types of things, along with the skew. Skew is very hard to find out there in futures options land, and these guys break it down for you pretty nicely. Nick, I'm hoping you get that nice skew graph we were talking about in the sneak preview episode. Hopefully that comes to the report in some version down the road, maybe on the premium version, because that is a pretty cool tool as well, breaking down the call wing and the put wing. Speaking of breaking it down, we're coming up against it. I know, Nick, you wanted to hit on a couple other product categories because they've been lighting it up this week as well. In particular, we don't get a chance to talk about the ags and the softs and all the other kind of stuff, all the other non-shiny, non-Texas tea stuff that much. But this week, it is indeed appropriate. So let's turn our attention, Nick, to the beans, because the beans were lighting it up quite a bit here. I'm looking at the report right now, and there's a lot of things jumping off the page at me, but I know you've been crunching away at this report for a while. So why don't you run through really quick and give our listeners kind of an overview of what really caught your eye this week out there in beans land?
Yeah, I think the first interesting thing I want to kind of point out, and I don't know if I think I excluded them. Did I exclude them? Did I put the weeklies in there for the bean contract I put out there?
I don't see them.
Let me see if I don't think I did. I can tell you in a second if I did. No, I did. Yeah, I did. So those, if you click on the bean contract link, you're going to see three sort of 5 character symbols versus 5 character symbols with numbers in the middle. Those are the weeklies, and you're going to notice there's not a lot of volume.
April 29th, May 6th, May 13th. Yeah, they're up there in the corner.
Right. So, but most importantly, in the beans this week, it was a crazy week, and what's been great about, again, this report is pretty new. It's probably 2 or 3 weeks old, and it's only been it's not even in full production release yet. But this has really made it simple to get your eye caught, just like Mark said, on the real big activity. And here's sort of a question I'm going to throw out there, and it's just something that we could probably talk about as the show goes on. You're not seeing in the report that's out there because they expired already, but I printed out something a little earlier about 12:45 Central Time. There was just tons of activity in the May contract, which expired today. So that had pretty much this 1 week contract had about 20% of the entire volume for the most liquid portion of the bean curve, and that was on an upside call. So we went through that call and then came back away from that call as well. And what you saw here with that big volume, it was essentially with the open interest going down, there was a lot of closing positions that were happening in that as well. So might have had some people that, again, this is all conjecture, but this is the stuff that you'll start to be able to see as you get more familiar with the report. Like big volume, I got a red number, and it happens to be the same strike in the open interest. Hey, there's somebody was closing, somebody's taking profit, somebody was scared and getting out, those kind of things. So it's the open interest in the volume, and that is going to tell you some important things. If you see a big volume number, but you don't see that represented necessarily in the most actives of the open interest or on one of the open interest profile tools, you don't see that strike being a most active, that just means there's a lot of trade and a lot of back and forth. So still a lot of opinions one way or another. So these are going to be important things that you'll be able to look at and start to make some of your decisions. So you say, hey, there's a lot of activity on the upside, but there's not a lot of opening or closing. That means it's trading. That means there's some liquidity. That's great stuff, right? That's good for anybody who's looking to just get started to know that if I get in somewhere, I'm going to be able to get out if I have to, that kind of thing. But Lots of activity in the beans. A lot of upside in both the May and the June contracts. At one point, I think the range might have been $75 at one point for the week, and now I think at the end of the day it's only 75 cents, and now it's down 30 cents. You had a range you went from 0 to 75, down to 50 cents, back up to 70, back to 30. So a lot of activity here. So if any people are looking for volatility, the ags got it. And frankly, I'm still learning about what forces the ags to move one way or another. So I heard some things about rain in South America, that kind of stuff. So this is another one. But I think that it would be would behoove you to sort of keep an eye on the ags as well, because there is some activity there for you guys to follow as you get involved in the futures options market.
Yeah, it's been a fascinating one to watch. You're right. I like you. I never spent any time in the ag pits. I was more in the equity options and index options pits, but it's been kind of fascinating to watch the moving and shaking in this product, particularly over the past week. Looking at this report, highlighting a lot of things vacillating around, a lot of them around the at-the-money parts, the 980 puts, which is 980s round there was a lot of at-the-money strikes this past week, but that's right around where we settled out here. And then 1040 calls also lighting it up into 2017, the March 2017. So those are pretty longer term and optimistic as well. But you're right, a lot of back and forth flow, which shows a pretty clear and volatile and interesting two-sided market. You don't see that very often. A lot of these names are going to gap in one direction. You see a lot of one-sided flow as a result. We're not seeing that in the beans. We're seeing volatility. We're seeing two-sided paper. Two things that should be very attractive to a lot of our listeners out there is they're perhaps looking a little bit farther afield. Maybe they're lamenting and wringing their hands saying, index equity volatility is kind of low, even though earnings season is not really lighting it up. Volatility is still low. Where can I go to find some volume, some volatility? Maybe the beans are indeed one place you should be looking. Certainly, from an activity perspective, the beans are really kind of lighting it up right now. And Nick, we're kind of up against it, but I don't want to close us out without also talking a bit about the rates. This is another thing that's kind of just been lighting it up, in particular out there in the realm of the 10-year. That's been moving around as well. And listeners, you can find this for yourself. Again, just click on the old 10-year tab there when you go to this portal over there on CME or on Quick Strike. You can just select your product that you want to highlight, and you'll get the updated version of this report as you're looking at it. As I'm doing it right now, like you were saying here before we started recording here, Nick, the 10-year, particularly on some of the downside activity, was pretty stark. Let's run through it really quickly before we have to say goodbye to our listeners for this week.
Yeah, so what you're seeing in the 10-year, and again, this is not a contract that a lot of new people to futures options are going to start trading, but it is a good contract to trade because there's a lot of back and forth. You'll see the call skew and the put skew change positions a lot, so there's a lot of activity just in the way the volatility curve is moving. But across the board. And one thing I want to kind of backtrack and mention in the beans, you'll notice that there wasn't a lot of activity in the weeklies, but there was a lot of activity in that 1 week regular option. So I'm thinking that at some point we're going to start to see even more of that activity trickle down to the weeklies because they're same. They're covered there for the same future. They're short dated, so you're going to see a lot of that happen at some point over there. But if looking at the Treasury report, lots of activity in the weekly. So you have the ability to trade, under 7 days, over 7 days, 7, 14, 14 to 21, lots of activity. But for the most part, what we saw here this week was big downside buying. And I think we hit some of those strikes. We didn't really go through many of the strikes where a lot of the activity, maybe a point below on some places, but a lot of downside activity. In fact, in the June contract, it was 134,000 traded, 135,000 traded in the 128 put. And that's pretty much, that was 20% of the volume in that contract itself, which had a volume of like almost 700,000. So lots of good stuff there. Again, easy to see. Like Mark said, highlighting the high volume activity expirations, highlighting the high volume changes in open interest, high volume traded in the strikes. And, we're open for suggestions too. This is a new report. If you like something, or if you say, hey, I'd like a column that does this, or hey, can you highlight something in this column a little bit more? We'll start to put some things in there, and you'll see once it's available, there's a display settings option as well, where you'll be able to switch what the most active is. You might want to say, well, show me the most active put, show me the most active call, or I'm indifferent, show me the most active option, regardless of whether it's a put or call, those kind of things. So we welcome suggestions. A lot of Quick Strike much of Quick Strike was built based on suggestions from early customers, new people coming in saying, hey, I'd like to see this. So we're all ears. So we hope that you enjoy this report, and we look forward to getting it released on the CME Group website.
All right, Nick, that music means it's time to bring to a close this extra exciting, brand new first edition here of This Week in Futures Options. Half-hour show to start off with here, listeners, this first episode. So as Nick mentioned, we do want your feedback, your ideas. We had to spend a lot of time, explaining the report this week, so we want to make sure you guys get a handle of what it is we're actually talking about here on this program. But going forward, don't worry, we're going to have it dive into a lot of activity, squeeze as much as we possibly can in for you in a half an hour wrap up here on This Week in Futures Options. But in the meantime, we're going to put this out. You can't get it yet on the network. Live is the only way until probably about next week or so, once we go through all the iTunes approval and launches and all that fun stuff. Then you'll be able to get it wherever you find your favorite Options Insider radio programs, including iTunes, TuneIn, Stitcher, our website, etc. So look for that coming next week. And if you're listening after the fact, like a lot of you probably are, we'll have that link in the show notes for the WTI report and all the rest of them, so you can kind of follow along with us here as you're listening and say, okay, that's what we're talking about. This is pretty cool stuff. Hey, I'd like to hear them talk about this. We're also going to have a futures feedback section, so don't worry, you guys can get your questions and comments in. Obviously didn't have a chance to do any of those this week because it's our first episode. But we'll have more of that coming here in the episodes to come. Looking forward to this. Join us live if you can every Friday, 3 p.m. Central here, 4 p.m. Eastern for some fun breaking down of all things futures options. And Nick, before we go really quickly, anything you want to leave our listeners with here as we wrap up this inaugural episode of This Week in Futures Options?
Mostly just thanks, and I hope we get some people that start to be interested on a regular basis, so we can get some good feedback and get a good dialogue going during the show. And the other thing would be, go out to the CME Group website. Quick Strike is offered as a subscription service, but on the CME Group website, there's 10 to 12 really nice free reports with lots of information, as well as Quick Strike Essentials, which is a light version of the main subscription version of Quick Strike. So there's lots out there available at no cost, simple registration for Quick Strike Essentials, and then the reports are there for you to use on the website. They're responsive, so you can look at them on your iPad and your iPhone as well. And just today, with the new CME Group iPhone application, there now is a tools section where you can see all of the Quick Strike reports as part of your CME Group app. So, and TWIFO will be one of those. As soon as it releases, you'll be able to fan through with your thumb and go across and see everything that we talked about, from expiration volatility all the way to the volume. But look forward to talking to you guys next week.
There you go. So it's even responsive. You can check out those reports, listeners, on your favorite mobile device. And of course, you can always stream, download, all that fun stuff via our app or via the Mixler app if you want to do it live on any device you so choose as well. And on behalf of Nick and indeed myself, I want to thank all of you for streaming live and all of you coming down the pike who are going to be downloading very shortly this new program as well. And we'll see you next week for more This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.